Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, we're going back to the old format. I figured out how to streamline a little bit of the production, so we're going back to the 12 to 20 minute videos, which will make life a lot easier for all of us to get the information that you really need. Let's get into tonight's video. As we look at what happened yesterday, we did see a rally early on. S&P was able to print an all-time new high, as was the Dow Jones. We saw general strength early in that session, and then it faded. As the 10-year started to push up through the 164 level, we did see the NASDAQ come under pressure. This began to push all the indices back into negative range for the session. But as we traded on, we saw the Dow Jones come back really strong. The S&P followed, but the NASDAQ continued to be weak throughout the session as we saw the 10-year stay up around the 1.68 levels, and that's pretty much an extreme that we've seen going back to last March. As we look to Wednesday's action, of course, we have the ADP report coming out. That's expected to show 420,000 new jobs. FOMC meeting minutes are coming out. I don't see a lot coming from that, but I do expect to see maybe a couple nuggets, but I don't think there's going to be anything super negative in there, and maybe we'll see some backing up of what happened in the 10-year yesterday. As far as yesterday's economic information came out, the ISM manufacturing came out. It was a miss, came in at 58.7 instead of the 60.60, 0.61, depending on who you're talking to, expectations. That was no real big deal. The jobs, or the JOLTS number with the job numbers, came in at 10.56. It was 1.013 last week, so we saw some contraction there, but just jobs everywhere. We're just seeing the continuation of this tight labor market. One of the things that continues to baffle me, that a lot of folks follow these stocks, and they call them growth stocks, I guess because they're new and they're supposed to grow. I think most people don't realize that if you went back to 2000 and looked at the Fortune 500, that half of those stocks do not even exist any longer. Some of them were bought out, but the bulk of them just don't operate anymore. And one of the things that I often talk about is I've been through at least 3 major IPO cycles over the last 40 years, and they all end the same. A lot of hype when everything's going on. Stocks get expanded up, everybody wants to own them, and then reality sets in. And I believe that's what's happening with a lot of these stocks, so-called growth stocks that are out there. They're starting to try to find the real valuation, and then the challenges go forward from here. And probably somewhere between 30 and 40+% of all of those offerings came in 2018, 19, and even especially in 2020, because this is where most of the hype happened. Folks were buying these offerings with both hands, and we know we had a lot of new entries into the marketplace last year. One of the things I think folks need to be careful about as we come into this next cycle, after these stocks have been crushed anywhere from 40 to 70% of their value off of their highs, and a lot of them are coming back even below or close to the initial offering. The scary part of what's going on right now is a lot of people are applying the metrics that were used in 2020 and 2021 to value these stocks. And this is a big, big problem. And all of these stocks are going to get revalued, and the earnings that come out are not going to have the impact, even if they beat. There will be some winners. I'm not saying that's not the case, but this carnage that we're seeing in this sector of the markets are substantial. One of the things that we offer in our services is we run about 4 different types of growth screens. None of these stocks show up on the growth screens because they haven't had any real metrics to measure against and a long enough background to actually start to count on those earning flows and the cash flows that come from these companies. There are a lot of things going on in the marketplace in the secondary stocks that aren't going to change for a while. And we see that through the activity of the Russell, and even looking at something like the ARK-K Innovation Fund. It came very close to printing a new low on this particular sequence. I think 91 or 90 and a half was the low. I think there was a 92 print or something like that. But the point of all this is this is a phenomena that happens, and we're seeing this even in our database, that there are very few stocks that are actually participating in this rally. Now, we printed up to an all-time new high yesterday, as I mentioned earlier, but there's no follow-through, and that has a lot to do with just folks rotating capital, especially out of the tech stocks with interest rates increasing. So I'll go through a lot of details in tonight's video just to unpack exactly what I think the impact is on the interest rates and the markets. And I'll be covering the typical markets that I always cover. Let's go ahead and get into the technical section here. Starting with the database, we did see a slight negative rotation, 490 buys versus 547 sells. The database is now 46.64% bullish on the short-term level. So we're not really seeing anything material here, but it's kind of grinding. As you folks know, the key metric here is 42%. So as long as we stay above that over the next several sessions, we're likely to keep a very positive tone as we finish this week and come into the second week of this year. As we review the S&P futures, we are down 1050 overnight, 0.22% at 4773.75. We're really not seeing anything material, but we are trading back into some key support at the 4762 level, which is the 10-period moving average. PPM1 is at 0.27, PPM2 0.19. So we have seen momentum back up a little bit, but the PPM being at 0.27, basically 0.28, should hold this market at that level. That will be an opportunity to buy if it gets down to that level. We look at the market grid, S2 is 4765, so that lines up with the S2 level. So I would look for R1, S2 today. It's likely to see maybe some follow through. It looks like it's possible to bounce off of this level and see a slightly higher, but it's all going to be based upon the configuration and what happens with some of the interest rate movements that I'll talk about here in a few minutes. Just looking at the S&P cash, the key support level there is also going to be that 10-period moving average, and it is moving up about 30 handles per day, so it's going to be around the S2 level as well, around 47.81. So same thing, looking at R1, S2. As we review the NASDAQ futures, we're seeing it trade down into some major support. I talked about the potential to hold the 16,349 level. We were able to get through that yesterday, and we did actually get a STX buy signal, which suggests that we should rebound. We are down 57 handles right now. It's likely that we'll rebound toward at least an R1 for today at 16,526. And we're already printing down toward the key support at 16,143. That will be a key support level at S2. So R1, S2 on this market as well. If we did penetrate through S2, that would actually be substantial, suggesting there could be more downside. This will also be affected by what's going on in the 10-year. Next market I'll cover is the 10-year. 10-year has actually exploded, did get an RTX sell signal yesterday as it closed at the 1.668 level. The high yesterday was 1.686. And I talked about this level just last night because this is actually the target of the Fibonacci. There were 3 targets that were released, and the high target in this pattern was 1.686. So we hit that exactly yesterday, and we're likely to see some retracement possibly coming down at least to about an R, coming down to about the S2, S3 level, which would be 1.64, 1.26. The extreme for today would be 1.72. That would challenge the October highs that we got at 1.69, and there was a previous March high around 1.72. Looking at the yield curve is starting to improve. I talk a lot about the 530 spread, and the reason why I'm a fan of this spread over others is I worked with the banks. I provided a service for hedging and positioning for some of the largest banks on the planet. And this was the spread that all the traders focused on because it reflected most of what was going on in the lending structure of the bank. The 210s are watched closely as well, but this 510 is where a lot of spread trading went on, and this is to manage the overall risk of the bank. Next market I'll cover is gold. Gold was able to rebound back above those averages that I talked about last night in the live stream. We were able to get back above the 1808 level. We closed at 1814. We're continuing to remain above that level. PPMs are starting to look a little more positive. PPM 1 at 0.15, PPM 2 at 0.95. So the focus today will be for if we can penetrate through R1 1820, the high so far tonight 1816, and move above 1820, we'll set a move toward the retest of the highs that we saw last week around 1828. Final market that I'll cover tonight is Bitcoin. We'll start with the daily chart. We're up 214, 46,311 right now. The 200-day moving average is 46,507. I've been talking about this for over a month now, that this market continues to hover along here. We're seeing some negativity start to flow in here, though. PPM 1 is down 0.97, which suggests there'll be a substantial amount of resistance at the 47,800 level, which would be about $1,400 higher. On the downside, the key number is going to be at this 44,559 number. Penetration of that, I talked about this last night, would suggest a substantial decline, and that is more evident here as far as a price target goes on the weekly chart. And below the 43,750 level, the next level is 34,000, so it could get ugly really quick on this market. Continuing to see a lot of negative flow here on the PPMs. Nothing good looks like it's going to happen with this market at this time. The best thing that would happen would be a sideways range continuing to hover around this 200-day, remaining above 44,000 and trading between 44,000 and 48,000 is probably the most likely scenario at this time. This will complete the video for tonight. Thank you for watching. We'll talk to you tomorrow night. Hey everyone, thanks for watching. If you enjoyed the content, make sure you subscribe, hit the like button, and hit that notification bell so you'll know when I post my next videos and when I do my live streams. Thanks again for watching.